Hello, everybody. Welcome to Intermediate Accounting 17th edition video solution walkthrough. This is for problem 17.6, and I want to give a shout out to Dima Aparia, and I'm not even sure if I'm pronouncing her name correctly, but it's an amazing name. So she's asked for problem 17-6, and that's what we're going to do right now. So this question is coming from the Intermediate Accounting textbook, 17th editions. Our authors, Don Kiso, Jerry Wonget, and Terry Warfield. The question used in this presentation is copyright 2019 by John Wiley and Sons. All rights are reserved. This is for educational purposes only. The video may not be distributed or redistributed without the express permission of Wiley. This solution presentation is copyright 2019 to 2022 by Bennett Tchaikovsky. All rights are reserved. The opinions contained within this presentation are those of Bennett Tchaikovsky and not the authors of the textbook or of Wiley. Let's get to it. Okay. So right over here, we've got problem 17.6. So before we get going, though, we've got over here McElroy Company had the following portfolio of investment securities at September 30th in its most recent reporting date. So for McElroy, on their most recent reporting date, let's just kind of look at that first. So on 9/30/20, basically over here, they had cost of their securities of Horton, Monty, and Oakwood. Oh, HMO, look at that. Okay, so my fair value over here. Okay, so right over here, what this is telling us is that we had to have an amount in our allowance to basically reduce when we're reporting marketable securities, we always have to be reporting them at the fair value. So what we're going to have is our investments at cost. And this would be 528,000. And then over here, what we would have is we would have an allowance to record securities at market. And in this case right over here, because the fair value is less than the cost, we would basically create this over here. We would have a $9,000 balance in this account. Now, if there was nothing in here before, if this was basically the very first start, what you would see is you'd have an unrealized holding gain or loss on securities, and then you'd have allowance to record securities to market. And just, I'm going to pause real quickly. I'm going to show all of you something real quickly in terms of where this comes around. So if we look at the SEC filings of Apple, what you're going to notice is that when their SEC, when Apple is showing their essentially over here marketable securities, this is going to be at market value. Now, the thing what happens is that, well, if we're recording these at market, we might be writing up or down an asset. And we generally don't recognize gains or losses unless we actually sell them. So what we're going to be using is something called an unrealized holding gain or loss. And this is going to be part of other comprehensive income. So when you come down over here and see below net income, you see this whole section down here of comprehensive income. You'll see basically this is how they're going through and reconciling. Essentially, if you didn't do this, if you just wrote up an asset without having a corresponding something flowing through the financial statements, you wouldn't balance. So this is really becoming a part of comprehensive income. And the reason is that we have to show marketable securities at market. So that's really kind of the whole part of this, is we're basically showing them at market. There are obviously other disclosures for marketable securities, but this is really the one where this kind of ties into. So for this one right over here, so on September 30th, what we would have basically is we would have this over here. You'd have investment at cost of 528, which is really this amount right over here. And then to get this to the fair value, we would have an allowance to record securities at market. And so we would be crediting this, and we'd have an unrealized holding loss on securities for 9. It's not asking you to do that, but I just want to give you that little background before we go through and do this particular problem. Okay. Now on October 10th, the Horton shares were sold at a price of $4 per share. So on 10/10/20, okay, so over here, I sold the Horton shares, and so I'm getting cash. The amount of cash I'm going to be receiving is going to be 54 times 5,000 shares. Okay, so this is going to be a total over here of 270,000. Now, when I go over here in terms of what was Horton, what was my cost of Horton? So I'm going to credit investments, and this is going to be for 215,000. Now, over here, what do I need to do to balance? Well, if I think about it, if my cost of it was 215, over here, I've got a debit of 270. I'm getting 270. Carrying value is 215. So I'm going to have a gain right over here at 55,000. Okay. Now, just if you can't remember a loss or gain, and you've seen me probably do this in some other videos, but when we sell any type of asset, this is what we're going to want to do. Just remember, we've got over here, if I sell equipment, right, what do? I have a loss, right? So let's say if I sell equipment, I'm going to be receiving cash. I have to get rid of that accumulated depreciation on the equipment. I'm going to credit the equipment. And then over here to balance, if I need a debit, it's going to be a loss. If I need a credit, it's going to be a gain. So over here, I have 270,000 of debits. It cost me 215, so I have a gain of 55. But go back and memorize this entry. You have no idea how helpful this will be for your accounting life. Okay, that also tells us over here that in addition, we purchased 3,000 shares of Patriot on 11/2/2020. So in this case over here, we're going to debit investments. And then we're going to go over here and we're going to go ahead and credit cash. And the amount we're going to go through and do that for is going to be, we bought 3,000 shares at $54.50. So this is going to be 163,500 to record purchase of investments. Okay. We'll say record purchase of let's see, what let's call this, 3,000 shares of Patriot. Okay. So right over here, and this is going to be 54.50 times 3,000. Okay. So now we get to, so we recorded the sale, the purchase, and now we have to do the adjusting entry related to those equity securities. So what do we have here as of December 31st, 2020, which is the last quarter? Well, we still have, we've got over here, we've got Monty, we've got Oakwood, and we have Patriot. In terms of my cost, so my cost of Monty hasn't changed. This is still going to be 133,000. My cost of Oakwood is going to be 180, and now my cost of Patriot is going to be 163. So my total amount of my investments at cost is going to be 476,500. But what I'm concerned with over here is that for this quarter is what exactly is my market value. So over here, when it comes to the market, it tells us over here that December 31st, 2020, the fair values for Monty were 106,000. For Patriot, it was 132,000, and for Oakwood, it was 193,000. When I go through and I add this up, what I'm going to come up with over here is I'm going to come up with a total value of 431,000. So this tells me that the ending balance in my allowance, so I report basically securities at market, needs to be 45,500. So let's go back up to Ingrid's T accounts. Very important to remember. So 9/30/20. And by the way, Ingrid is one of my amazing accounting students at Irvine Valley College. And she always busts on me. She's all, Bennett, you got to do it in T accounts. So she's absolutely correct. So what I'm going to need to do here is that if my investments are at 476 and this should be at 431, I'm going to need an ending credit balance of 45,500. This needs to be my ending balance as of 12/31/20. So this ending balance right here is essentially the difference between the cost and the market right over here. So, but if this is the ending balance I need, what is going to be the adjusting entry? Well, I don't need to do a full 45.5. And why is that? I already had 9,000 in the account. So to get this to balance, I need 36.5. So what I'm going to go ahead and do for my December 31st, so 12/31/20, I'm going to be crediting my allowance to record securities at market. This is a contra asset account. So right, or it could actually be a plus account depending on where you are in the scheme of things. So we're going to make this a nice, we'll go with some Bruin colors here. Not that I'm a fan, but all my students are crying because of how they get treated when they go there. Okay, so right over here, not ripping on them or anything like that. Okay, so right over here. So for every credit, I need a debit. And this is basically going to be an unrealized holding loss on marketable securities. Okay, and why is it a holding loss? Well, I haven't sold them, so it's unrealized. So again, I'm using this allowance account basically to ensure that my securities are being reported at market. So that is problem 17.6. Again, I want to give a shout out to one of my subscribers. Diamond, thank you so much for having me do this. And right over here, so I want to thank Wiley. Obviously, them allowing me to make these videos is hugely helpful for mine as well as other students. Have a great rest of your day, and I look forward to seeing you on the next video. Have a good day.